Hello everyone and welcome to a new video blog in Elliott Wave Forecast. My name is Ayub. Today is the 2nd of April 2023. In today's video we'll be taking a look at SBUX. This is the daily chart. So we start labeling the move since 2022, specifically from May. We can see here that the stock has been rallying within an impulsive structure. We had an impulsive 5-wave advance, first rally in wave 1, wave 2 pullback, followed by wave 3, a wave 4 pullback, and a final move early this year, which makes the 5-wave advance. So we had the 5-wave advance. You can see here in the RSI we have the divergence in the 5th wave. So after the stock did manage to finish the 5th wave in the recent peak within the 2nd of February. So we have the 5th wave ending around 110. Since then, the stock has started the correction to correct the entire rally since 2022. So this entire 5-wave move has ended. And from there, the stock started the pullback in wave 2, which have two potential scenarios that will be discussed in this video. So the first main scenario, after the stock started the pullback, we can identify a zigzag structure that took place initially from the peak. We had the wave A wave B, then a wave C that ended last week. So we have 3 waves pullback, which is a zigzag structure. Now we know that after the 5 waves move to the upside, the market will usually correct in 3, 7, or 11 swings. So we got the initial 3 waves pullback, then the market resumed the rally and potentially a new cycle to the upside. So after the 3 waves, we got the direction higher. Now the market needs to decide whether it's ready to resume the rally or start a new cycle to the upside similar to this one. So later on it will need to break above the 110 area to confirm it. So that's the most bullish scenario that we can be looking at this stage, which means the current reaction from the lows, which is looking to be an impulsive structure to the upside. This will be your wave 1. Then we can expect a 3 waves pullback to hold the lows from the 24th of March. So we hold the lows around the 97.2 area and then rally from there. So in the short term, basically when we finish this rally, which is still in progress, I mean, we are still rallying in the short term, probably within the wave 3 of 1. So strong rally here. We could be ending soon this wave 1 in the coming 2 weeks or next week. Then we expect a pullback to happen to correct at least a cycle from the 24. If the lows holds around the 97, then we expect the stock to resume the rally or at least do another leg to the upside. Of course, this is critical. We have a clear in the short term and validation levels for both moves. We need to hold above the 97. That's the initial and validation level in the short term, and the stock later on needs to break above 110 area to confirm the break to the upside. Now the second scenario, if the move to the upside managed to take place but the stock doesn't make new highs or fails to break above this peak from early this year, then there is a potential that the stock will be turning into a 7-swing correction or a double 3. So remember, the first main scenario is a bullish one. I mean, strong bullish scenario means that we already ended the correction on the wave 2. We did already 3 waves, but remember, without breaking the peak, the market either will do 3, 7, or 11 swings. So without breaking the peak, then we put the second scenario, which is going to be a 7-swing correction. So in this case, we do have the 3 swings to the downside. So the market will do a 3-wave bounce, fails to break the peak. So the current move to the upside is only wave A. So we do the rally in wave A, then we pull back in wave B. Again, we could still hold the 97 area. Doesn't need to break it. We do another leg higher because based on this rally, which is a 5-wave to the upside, we expect a pullback to hold and another rally similar to this one. And again, if we fail to break the peak, we can get another 3 swings similar to this one to finish the double 3, which will still, of course, correct in the cycle back from 2022. So we still have more room to go. I mean, potentially we could even be looking for a move to toward this area on 94.89, potentially 50% correction of the entire cycle before the stock will be able to resume the rally. So potentially a 7-swing structure is on the table as long as the stock remain below 100. Then that's going to be the less aggressive structure that the market could present. But you can see both scenarios, starting from the bullish scenario with a 1-2 to the upside. They are sharing the same initial move. So we have finishing an initial rally, wave 1 or wave A, followed by three waves pullback, either wave B or wave 2. Then we're gonna get the rally. During this rally, we'll have more data later on, of course, and then we'll be able to know if the stock will be able to break this peak or remain below it. Then we can get another move to the downside to correct the cycle before we get a potential buying opportunity in this wave 2, which will be a good area to look for buyers. Then the stock either, of course, will resume the rally to new all-time highs later on, because breaking this peak will open further upside, or remember 3, 7 or 11 swings, which mean again without breaking this peak, which will be the third option later on. In case we don't see a break above the previous peak, we can still make 11 swings before the stock rally again. So the key level here is the 2nd of February peak, which is around 110. I hope the idea is clear. The stock is really showing big potential for the break to the upside. When this happens, that will put the stock into a strong structure to the upside with a potential bullish sequence in the daily, which will suggest further continuation maybe later on this year.